Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. A little conversation now about the surge in natural gas ETFs with our ETF strategist, Eric Dutram. So, you bring us word that there are some things behind this surge in natural gas. What's been happening in that market?
Well, first, a little back history of natural gas. 2012 was a very difficult year for the space. The commodity was really hurt by all this talk about fracking and all the new supply that was coming on market. But in the last couple of months, we've seen a huge reversal in this space, largely thanks to utilities kind of shifting to natural gas as their kind of input as their fuel. And then a lot of other drilling companies have kind of made the switch from natural gas to oil. So this has kind of reduced the supply. And then as you and I know, being here in Chicago, it's been a really long winter.
Yeah.
So this has really also helped to curtail the supply of natural gas. So all these factors combined have led to a kind of a nice reversal in natural gas to start 2013.
All right, so how can investors then play that situation?
Well, the most popular choice is a fund called UNG, and trades several million shares a day. So it's pretty good volume for traders, so you can get in and out of the product. And this ETF has gained about 15% this year. It's actually one of the best performing unleveraged products out there, kind of crushing the S&P 500, at least this year. And then if we look at the leveraged products in the space, you got UGAS, and then BOIL. Great name there.
Yeah,
BOIL,
I get the connection too. It's amazing the image I just did.
BOIL's a 2x leverage fund, and UGAS is a triple leverage fund. And these are up respectively 50% and 30% year to date. So we've seen a huge surge in natural gas ETFs, at least to start 2013.
So is this a surprising statistic?
Definitely, because if investors have been paying attention to natural gas ETFs over the long haul, they've actually been pretty terrible performers by and large. And that's largely thanks to the futures curve. Natural gas ETFs, they don't track any spot prices. They track futures, and so they have to continually buy new contracts month after month. And because of a situation known as contango, they end up having to basically pay more each month for the contract. So that kind of eats into the possible total returns. This hasn't really been the case so far in 2013. We've kind of seen a flat futures curve. So that's really helped natural gas, surge higher, at least so far this year. And if we look at some of the charts, right here we got a 2-year chart of UNG against the S&P 500. And UNG is down almost 50%, or a little more than 50% over the past 2 years, while the S&P 500 is up 23.5%. But if we take a shorter term look, past 1 year, we see that UNG is up about 21%. We can see that nice big surge once we get last couple weeks of 2013, while the S&P 500 is up, still respectable, 13%. But obviously, if you compare this to the 2-year chart that I just showed you, it's a pretty big change.
Any way to tell at this point what the future looks like for this segment of ETFs?
It's hard to say. Investors should definitely pay close attention to the futures curve. If it stays flat as it has been, natural gas ETFs could continue to move higher. But if we see a more traditional path in the futures curve with a big slope, we could see a continuation of the longer term trend, which has been pretty bad for investors.
Okay, do you own any of the ETFs that we talked about?
I do not.
All right, BOIL is not boiling over in your portfolio.
It's not.
Eric has other ETF related articles that he pens by his own hand that he'd like to share with you, and you can access them by going to Zacks.com's homepage and scrolling down the page until you get to the ETF module near the bottom. Click on any of those story links. It'll take you right to the ETF section of Zacks.com. With Eric Dutram, I'm Terry Ruffalo.